Hey, welcome back to YT Finance, and this is the channel where I went to business school so you didn't need to, and today we are talking about Palantir Technologies PLTR stock and why analysts are saying to buy this stock right now. Then we'll be talking about Sofi Technologies SOFI stock to determine if retail investors such as you and I should be buying this company at such a low price point right now and what this company could grow into the future. Then we're going to talk about AMC stock to determine if AMC stock will undergo a short squeeze, particularly in a recessionary environment, and if the current stock price trajectory is headed upwards or downwards, and what the median stock price target is, in my personal opinion. And then lastly, we're going to be going over Vinco Ventures because there has been a very radical news update for this particular company, considering that there was a thwarted hostile takeover. So for more stock news videos just like this one, remember to go and smash that like button right now, comment your thoughts down below, subscribe if you are new, and without further ado, let's just jump right into today's stories. So we're going to start off with Palantir Technologies PLTR stock, and Palantir is a big data and analytics company that serves both commercial clients as well as government enterprises. Basically, it mines data so the management of that company can use this data to make data-driven decisions. And right now, the PLTR stock trades at $9.45. Palantir Technologies, according to this author, is a clear buying opportunity right now, and even when we did our comparison video between Snowflake and Palantir Technologies, we concluded that Palantir Technologies is a good buying opportunity, and this financial author did the exact same. When he compared Palantir Technologies with Snowflake, he also came to the conclusion that Palantir's PLTR stock is a good buying opportunity as long as the price point is below $10 per share. He says that Palantir is very well positioned to actually surprise the overall market with better than expected and projected revenue growth from Q3 onward throughout the rest of the year of 2022. He also mentions that the PLTR stock trading at such a cheap valuation right now is no surprise because a multitude of technology-heavy growth stocks are trading at a substantial discount right now due to the overall macroeconomic environment with rising inflation rates, increasing interest rates, as well as the threat of an economic recession. But despite this, the PLTR stock is still set to grow during this time of market volatility. And despite Palantir still making losses on a GAAP basis or a generally accepted accounting principles basis for the full year of 2022 and 2023, we still have hope because current projections still say that 2025 is when the company will become profitable on a GAAP basis. So that's going to act as a phenomenal catalyst for this particular company. Regarding Palantir's Q2 2022 expectations, management said that the projections could come in below expectations, so they didn't give a very positive guidance. But I want to mention that even though their Q1 financial results were actually pretty good in my opinion, which were released back on May 9th of 2022, the stock price still dropped to one of its historic lows of $6.44. So clearly the market is so out of touch with these companies and their fundamentals that even if Palantir did beat on their Q2 report, that does not necessarily mean that it's going to reflect very positively on their PLTR stock price. So is the PLTR stock price set to rise again after its Q2 report? Well, the author says, and I quote, "I hold the view that Palantir stock is expected to rise again when the company's Q3 2022 and Q4 2022 financial performance exceeds market expectations," end quote. So even though in Q2 of 2022, their earnings per share and revenues could come in below what Wall Street expects, in Q3 and Q4, it should be actually above what Wall Street expects. And by beating these metrics and having an earnings beat and an EPS beat 2 quarters in a row for Q3 and Q4, this could increase the overall PLTR stock price. The author also emphasizes that Palantir shares should continuously head upward in the intermediate to long term, and I've been saying that for a while because if you're willing to hold this company for the next 5 to 10 years, it's going to be a fantastic hedge against geopolitical tensions and conflict because this is a more of a defensive company. So in the end, the PLTR stock, according to this article, is a clear buying opportunity right now because he says that they're going to scale their revenues very extensively in the second half of 2022. Palantir still looks like a good long-term buying opportunity if you can get the company for below $7. However, this author still says that if you can buy the PLTR stock below $10, that is still a good deal if you plan to hold it for the long term. Analysts have also said, specifically 5-star analysts, which are extremely reputable, much more than just saying analyst, because to be a 5-star analyst, you're going to have to be right more than 60% of the time. time. At least that's what it is on average. And according to a 5-star analyst, he says, and I quote, "After falling approximately 73% from its early 2021 peak, we see the risk to reward as compelling for a software business with a 30% growth rate, gross margin structure in the 80% range with escalating contribution margins and a balanced commercial and government customer mix," end quote. So overall, this 5-star analyst says that for the long term, Palantir Technologies is actually in a very good position for a software company. This article also goes on and says that Palantir has set its sights on becoming the 5th largest government prime contractor for the US government, which is absolutely insane, which would equate to a market opportunity of around $63 billion. However, many analysts and professionals think that the company has a much larger market opportunity when it comes to the government market segment. Also, I want to point out that the larger opportunity, in my opinion, despite what this article says, is in the commercial sector, because this article currently identifies the commercial sector and the commercial market opportunity to be somewhere around $56 billion. But honestly, I think that the commercial sector is scaling much more quickly than the government sector for the services and products that Palantir offers, which means that eventually the larger market opportunity is going to be the commercial sector, and it also means that Palantir will end up making more money off of their commercial contracts in total than their government contracts. So far, there's around 6,000 companies right now with revenues over $500 million that Palantir could potentially gain, and right now they've only signed around 184 commercial contracts, which has actually tripled since 2019. So clearly there is huge demand for their commercial products and services, which means, according to 5-star stock professionals, if we consider everything from above, the PLTR stock is a strong buying opportunity, with some of these 5-star analysts saying that the company could be worth at least $20 in the next 12 months. Now, I think that is rather bullish, and I don't agree with them on that particular point. I do think that is definitely something that Palantir could achieve in the future pretty easily. Right now, the current PLTR stock price is worth between the range of $9 to $10. However, according to analysts, we have 4 buy ratings, 6 hold ratings, and 3 sell ratings, with the low-end analyst price target being $6 per share, the average price target being $12 per share and 4 cents, and the highest price target being $20 per share, again, from a 5-star analyst. So overall, this is looking very good for Palantir Technologies. Now, with that being said, let's move over and talk about Sofi Technologies, SOFI stock. And if you didn't know, Sofi Technologies basically operates as a digital bank because they give their customers an all-in-one inclusive digital app which offers them financial services and or products, which not only saves money for Sofi Technologies because they don't have to operate a physical brick-and-mortar branch bank, but instead they are completely digital. Currently, the SOFI stock price trades for $6.17 per share, and many people think that it's a bargain right now. So why do they think this? Well, back in October of 2021, Sofi Technologies and their stock price was trading at around 7 times their forward sales, which means that investors are betting that Sofi Technologies will literally 7x their sales sometime in the future. But now, the PS ratio, or price to sales ratio, which weighs their current market capitalization with the amount of revenue and sales that they're bringing in, currently comes in at only 4.2, which is absolutely astonishing for a growth company such as Sofi Technologies, but still above and not as competitive compared to other legacy banks. Now, the reason why this is shocking is that Sofi Technologies has grown by around 70% or above in terms of their revenue growth throughout 2021, and for 2022, they're still anticipated to bring in double-digit revenue growth, which would meet expectations. This has allowed the company to scale from December of 2020 from bringing in around $565.53 million to December of 2021, where they brought in around $984.87 million, to 2022, where they are set to bring in around $1.5 billion for the entire year of 2022. And this is why an Oppenheimer analyst actually says that Sofi Technologies is rapidly expanding their revenues so impressively, and that they have such a good customer base who have FICO scores for their loans and borrowers above 746 for their credit score. This means that the company is going to be extremely resilient even during a time of stock market volatility, or even if the economy enters a recession. Even if the entire country goes into a recession, Sofi Technologies customers will actually be able to still pay their loans, which is something that other banks are going to have a huge trouble with various people defaulting on loans if we start to go into a recessionary environment. Sofi, according to analysts and stock experts, as well as retail investors, think that SoFi Technologies is a moderate buy right now, because according to 6 analysts, they actually say that this company is undervalued, while 5 analysts just say to hold the company. Right now, the average price target is $9 per share, which is still above the current stock price of around $6.15. However, the low-end price target for the company is $6, very similar to PLTR Technologies. And another similarity with PLTR Technologies is that the high-end price target is $20 per share. In a similar way, we're going to talk about AMC Stock. And we're going to point out one green flag for buying AMC and one red flag that says not to buy AMC. If you didn't know, AMC operates a chain of theaters, and right now the AMC stock is hovering at around $14.20, with various stock professionals saying that the company is going to either fall to $1 or surge to $35 by year's end. Now, for me personally, I have a $9 average price target for this particular company. However, that just means that the current stock price, in my opinion, will fall down to around $9. But let's see what this author actually has to say about my personal price prediction. Well, after around a year, the company has pulled back in their stock price by around 85%. So AMC Entertainment Holdings, ticker symbol AMC, has dropped by around 85% ever since its massive short squeeze. But I do want to say that technically the company has been on a mend and the stock price has increased from their May lows. It's done this so impressively that it's actually gained around 77% due to the momentum in this particular company. If you didn't know, AMC went through a horrible time during shutdowns, and this is when streaming services really got a lot of attention, which is ultimately a huge threat to the theater business. This is going to permanently alter their overall business strategy, so we need to make sure that AMC has a good long-term business strategy so they can actually continue to make and scale their sales and revenues. Now, what's good is that AMC's top-of-the-line revenues are within sight of the same levels that we saw before the shutdowns began, and hopefully the company continues to scale it beyond that so they can fill the gap that's been left by multiple movie theaters going out of business. So hopefully by 2023 or 2024 they can do that. However, I personally just don't see that happening. I think that streaming services are really going to hurt this particular industry, and I think that it's going to be relatively flat, and investors aren't really going to like that, which means that the company is going to eventually start trending downward in their overall stock price. But that's just my personal opinion. So the good news is that AMC plans to fill that content gap that many other theaters and singular theaters and non-theater chains, when they went out of business, AMC has actually bought those locations and hopefully can start scaling their revenues since the shutdowns are over for now. Now, the bad news is that AMC is actually losing more money than it was before 2019. So even though there is a large vacuum that has been created that AMC can fill and hopefully scale their revenues by this, they're actually spending and wasting more money now than ever before, which I don't think is very good. Despite AMC trying to rally investors for another potential short squeeze in their stock price, getting involved into NFTs or non-fungible tokens and cryptocurrencies, as well as selling AMC branded popcorn outside of their theaters, on top of investing into a gold mining company, these are all honestly just distractions from their very poor business model. And that's what I like to look at. I like to look at, is this business model successful? Has it been successful in the past? And what do their current and future revenues look like? And right now, it doesn't look good for AMC stock. So if we weigh the risk to reward carefully for this particular company, I think the risks are way heavier than the particular rewards. But again, every investor has their own risk tolerance. And for me, it doesn't mean that AMC is a bad company or that the AMC stock price won't make you money. It just means that it's too risky for my risk tolerance, and I am very risk averse due to my investing style of investing into ETFs and single growth companies for the long term. Now, lastly, I want to talk about another hyper risky stock, which is Vinco Ventures, ticker symbol BBIG. Currently, the BBIG stock trades for only 78 cents per share, which is extremely low. So this is clearly a penny stock, and I've never been a big fan of Vinco Ventures. I've made many other videos saying that I really just don't see the appeal to this particular company, but some investors really tend to like this company. If you didn't know, Vinco Ventures is most known for their subsidiaries, specifically Lemotive, which offers a video sharing social networking platform, and that's basically what they're mainly concerned with. However, there's been a lot of drama in Vinco Ventures lately, which is why I wanted to report on it. So big stock has actually plunged extremely low as of today, because originally there was supposed to be a stockholder meeting today, But despite the news of an attempted hostile takeover, that didn't happen and it was postponed. So let me tell you what this article says, and I quote, it says, "Last night, Vinco put out a press release detailing an attempted hostile takeover by the Farnsworth Group. The Farnsworth Group consists of former co-CEO Theodore Farnsworth, former ZVV Media Partners president and Vinco CEO Lisa King, former Chief Security Officer Eric Noble, and former Chairman Roderick Vanderbilt. The company terminated all 4 executives following the attempted hostile takeover," which is absolutely crazy. So basically, these high-ranking executives tried to operate a hostile takeover of the company, which is extremely odd in this case. Originally, there was actually a press release which was deleted from their home website, but various news articles luckily have snagged it. So if you want more on this, you can click the link in the description box down below and look for my sources. Visit this article, and then you'll have plenty of other hyperlinks to other articles that actually highlight and go more in depth with this. But besides this drama, I do want to say that the company has postponed their stockholder meeting to August 23rd. And they're delaying this because they want to give their investors, quote unquote, more time to consider a vote on the proposal about them increasing the total number of common outstanding shares to 750 million, and they also want to increase the number of preferred shares to around 30 million. And honestly, I just think that is a bad idea overall, and I really just don't see the appeal to this particular company. But I would love to hear your thoughts down below about Palantir Technologies, Sofi Technologies, AMC, and Vinco Ventures and their BBIG stock. Smash that like button for more videos like this one, subscribe if you are new, and I'll see you in the next YT video.